Well, the packaged food stocks have been on fire lately. Some of them can't seem to get enough love. I'm talking about like Mondelez. This is the snacking kingpin. Here's a company that reported a terrific quarter late last month, yet its stock is still $10 off its highs. We got to find out what's going on here. This could be a real bargain. Let's check in with Dirk He's the chairman and CEO of Mondelez to get a better read on how his company's doing and where it's headed. Mr. Welcome back to Mad Money.
Thank you, Jim. Pleasure to be here.
Thank you. Okay, so Dirk, this pandemic has released something that I found somewhat unexpected, a lust for snacking. Now, we know the millennials that embrace snacking. You and I have talked about that. But now it seems like, aided by the work-from-home movement, it's a generational tidal wave. Can it stay?
I think it will stay because if you look at the consumer is nervous at the moment, anxious, spending a lot of time at home. And so they want comfort. They want something that brings them back to normalcy. And as a consequence, they're snacking more. Also, they used to eat a lot out of the home. Now they have to do that eating in the home. So I think for the foreseeable future, that increased snacking is going to stay. And hopefully that will last even when things have returned to normal, which could be a significant time from now. So I do think that it's going to stay. The other thing we're seeing is not just the snacking. They're going back to trusted brands, the Oreos, the Chips Ahoy, the things they know and love, makes them feel good. And I think also that return to trusted brands or increased penetration or more people consuming our brands, I think that will last also.
Well, let's talk about a contradiction that you've addressed head on. I think the analysts are far behind what you're getting at. You did an unbelievable talk, the Snacking Made Right investor call that was a couple weeks ago. And in it, you talk about the generations. Now, if I presented my kids the Nilla wafers, which I love so much, the Oreos, they would be circumspect. Tate, they might go for. But HU, the chocolate, if they knew that was Mondelez, they'd be shocked. Now, that's a partial investment. But is this where the new Mondelez is going? Something like you, where my daughter has a tower of it when I walk in, because that's all she eats?
No, we try to provide snacks for all types of consumers. And yes, you're right. The younger consumers tend to be much more focused on brands and what do these brands mean for them. And so as a company, yes, we're trying to expand into brands like you, which stand for something different. That doesn't mean, however, that an Oreo, for instance, doesn't do well. It is the most popular food brand with Generation Z and millennials. It still is. And so there is this mixture going on, and we try to make sure that our old and established brands, which are still very young in many ways, like Oreo, still appeal to younger consumers. But at the same time, for those that really aren't there, we are offering them a new range of different brands. And we try to do both, basically.
Well, I think that must be one of the reasons why you have in what you called, and I quote, unprecedented share gains. But another thing I think you're doing well, I want you to talk about is, in our office, when we have Oreos, okay, my generation just loves Oreo. That's all we know. You've got many different iterations of Oreo that I would have found as almost sacrilege, but the younger people love.
Yes, they do, and I think it has to see with where younger people are looking for what's important to them and what a brand stands for, what it does for the community, what it does for sustainability, and so on. Those are things that are really important for them. And as brands, you need to make sure that that is there. And so that's why we did something like Snacking Made Right. We want to show that as a company, more than ever, what we do in ESG is important, and that we want to do the right thing, especially in these circumstances.
Now, you also talk a lot in all your venues about the resurgence of some parts of the world while others are going down. You talk very positively about China, and Asia's been incredibly strong for you. United States, some convenience store cutbacks, and then your organic growth here is extraordinary. Latin America, I am very worried about from what I read about by COVID. So can you just give us around the globe where we are?
Yes. Well, the U.S., I think your audience is aware. We see a big increase in snacking. Consumers are at home. We have a big biscuit business, so we see a big increase in demand. and that's clearly benefited our sales. We see something similar in Europe, but there our business has also a number of other things, like more away from home, like food service, or more world travel retail, so the duty-free type shops. And those, obviously, those two are quite affected. So we see an increase in Europe, but it's not to the same extent as we're seeing in North America. China has been incredible for us. Yes, February was down. March, we were already in line with last year. And April, we're far above last year. That is largely due to our team, who were out of the starting block after the crisis, the first ones, and really put a lot of dedication in it. But China is coming back with a vengeance for us. And then, Southeast Asia, India, at the moment, quite affected, largely because there's huge lockdowns and the government really doesn't want consumers or workers to go to the plants or to the stores. But that's going to come back, and we think they will come back quite fast. And so that leaves Latin America, where we're seeing the same thing, quite harsh lockdown measures. We still see the trend of infections going up. And we expect in the coming months, Latin America to be severely affected. And we're taking all necessary precautions to be, again, out of that starting block as soon as the stores open up again. But Latin America is probably going to be the slowest in recuperating from this. You're right.
Last question. You've really made your balance sheet fantastic. You've brought down the revolver. You've issued debt at very low prices. But you do have a 13.6% stake in Keurig Dr. Pepper, which has been a very good stock. And JDE, I happen to be a big Pete's fan myself. Possible IPO coming there. Do you really need to monetize those? Are those financial or are those strategic?
No, those are financial investments for us. We support the IPO of JDE. It offers us liquidity, not that we need it right now, but it gives us options. And it also puts a marker on what the value is of our stake in those companies. KDP is already public, as you know. So we are very supportive. We don't need it right away, but it gives us options for the future.
Well, excellent. Dirk, thank you so much for coming on the show. And also thank you for everything you do from Cocoa Life, for all the several 100,000 farmers that benefit because you care. And I know that's your initiative. That's Dirk Van de Putte, and Dirk is the CEO of Mondelez MDLZ, an inexpensive stock that deserves to be higher. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.